this week we'll be looking at the pound against Japanese yen, Australian dollar against Canadian dollar, and we'll also look at gold and see how we can easily make up to 1,000 pips without doing much. Now, when it comes to this swing trade, you need to understand that when you are going to trade swing, you need to balance fundamentals with technicals. So we will first of all look at the fundamental drivers that are going to affect our trades for the next 3 weeks, because some of the trades we take today will most likely be running for the next 21 days. So if you are new to this channel, we're actually I'm giving out free swing signals, and we are in a series of 20 swing trades, and this is the 3rd edition. So I want you to do me a favor, subscribe to the channel. I am very happy to work with you on this channel, and I'll be dropping free educational content that are going to be useful to you. So please do me a favor, click on the subscribe button and subscribe. You can hit on the notification so that when I drop another free signal, you will get it. So I want to appreciate you. If you have done that, just know that I'm very grateful. And in any time throughout this video, if you have any question, anything that bothers you, any currency pair that you are looking at and you're confused, you can drop it on the comment and ask your question. So let's look at some of the fundamental data that are of importance to us. Now, the first thing we see here on this chart, we have the hedge fund sentiment. And a lot of persons do not know what hedge funds are. When it comes to hedge funds are institutional traders, and their goal as institutional traders align with the goal of the retail traders. What it means is that they are there to speculate on the market and make a profit, just the same way that we are also there to make a profit, but they are trading with huge amount of money in billions of dollars. So with their positions, the way they are trading is actually going to affect us, and most of their trades are swing trade. They keep their trades for a longer period of time than retail traders. So we need to align our actions based on what they are doing. Now, if you look at the hedge fund sentiment here, this hedge fund sentiment actually shows the chart of the past 3 weeks, what hedge funds have been doing. So if you look at it, for when it comes to the first thing here, the US dollar, if you look at the US dollar, hedge funds for the past 3 weeks, they have been selling the US dollar massively. They sold US dollar last 3 weeks. They were net short about 20.1% against their buy positions. Then last week, the week before that, after that, they were minus 22.6%. That means they are selling US dollar massively. And then this last week, they are at minus 22.7%. So you can see that hedge funds are selling dollar. I do not know their reason for doing this, but we will see more information as we proceed. Now, when it comes to Swiss franc, they are buying the Swiss franc. They increase their positions from 0.9 net long to around 5.8% net long, and right now for Swiss franc they are at 5.2. Then you can see that at the same time that they are selling the dollar, they are also selling Japanese yen, and Australian dollar. They are buying Australian dollar, they are buying New Zealand dollar, they are selling Canadian dollar, and they are increasing their positions on the pound. So the final thing is that for euro, very average on euro, they are not really pushing so much money to the euro trades. To buy the dollar this period, you need to be a little bit careful because of this information. Now, the second thing we need to look at is GDP. When it comes to GDP, the GDP shows how the economy of a country is growing, and here you can see that the GDP of America is well above 3%. The Swiss franc, they have their GDP increasing from 0 to around 0.30, so a slight increase. For Japan, you can see that their GDP is dropping. So this is one of the reasons why I think that the hedge funds might be making that decision to sell the dollar, because the Japanese economy is not growing this period. Actually, it's approaching a recession. Then Canadian dollar dropped massively. Canadian dollar, if you look at Canadian dollar and Japanese yen, their GDP is going down. New Zealand has their GDP dropping. Australia has a GDP that is growing a little. Switzerland has a GDP that is growing. While dollar is actually, when it comes to the American economy, their GDP is dropping, but not is still within a very good level. For Eurozone and for the pound, their GDP is approaching a recession. So that is one information you should get from there. So in other words, when it comes to GDP still favors Swiss franc or to a certain level. Okay. Now, then other things you need to see here is inflation. When it comes to inflation data, most of the central banks of the world, they like their inflation target to be at 2%. So if inflation is above 2% and growing, if inflation is above 2% and growing, what the central bank will do is to try to do what? Increase their interest rate in order to bring inflation down. But when inflation is above 2% and is slowing down, central banks normally do nothing. Okay, so if you look at this chart here, you will see that for Australia, their GDP, their inflation data is actually dropping. Australia is not really under pressure because their inflation is coming down towards 2%, though it's still far above. But you can see for the past 3 months, it's been dropping. The same thing with the New Zealand, and Canada has a slight increase in inflation. Then you have for pound, inflation is actually somehow on the increase. Then Eurozone have their inflation declining, but still above 2%. Now, when it comes to Switzerland has their inflation below 2%. So what does this tell you? They might be looking for a way to push their to cause a growth on their economy, okay? Because they still have the opportunity to do that. Their economy can still grow because they are below 2%. So that is one thing that you should bear in mind. Now, when it comes to interest rate, for the past interest rate season, all the major economies of the world, they are static. They are just neutral to interest rate. They are not yet cutting down on interest rate because we are expecting central banks to begin to cut down on interest rate. But at this point, 2 countries, the US and the New Zealand, they have the highest interest rate so far. But our focus is on interest rate cut. Which central bank is going to cut interest rate first? So this chart, to me, when it comes to interest rate, will be neutral for now because we'll be waiting for the first action from central bank. So with this information now, whatever you will be seeing in the technical analysis, it should give you already have a prior knowledge. This is what is happening on the background about hedge funds, about inflation, about GDP, and about interest rate. Then when you see your technical, we'll look for technical positions that align to what we have seen here, and that way you can place a trade, do your proper risk management, and be at peace that this trade is going to play in my favor for a very long period of time. All right, so having said that, we will be going to the technical to see some of the trading setups that are good for us. Let's look at AUDCAD. So AUDCAD is one of the trades that we'll be taking this week. Last week we did something on AUDCAD. When we come to the 4-hour time frame, we saw that this currency was in a downtrend for some time. As you can see here, the currency was in a downtrend. Actually, it was in a downtrend. So something happened. When I gave that last signal last week, I drew the Fibonacci retracement from this point to this point. Let me zoom out so that you can see clearer. Okay, so this was what we did last week. I drew the Fibonacci retracement from this point there, and then I told us to take a sell around the 61.8 fib level, which we sold, and that trade started going in our favor. When it came to this support level, I closed out some of the trades because I used to enter my trade with 3 orders. Okay, so I closed one of the trade and brought the other one to break even. Then the market started retracing and it actually hit us out. But this week, based on the fundamentals you have seen, we have more reasons to buy the AUDCAD. So I went to the weekly time frame. If you come to the weekly time frame, you will see something on this currency pair. Let me delete this. If I delete that Fibonacci retracement, you can see something here that this market was in a downtrend on the weekly time frame. Then it broke out. So after it broke out, if you zoom out this chart, if you zoom it out right like this and take your Fibonacci tool from the bottom here to the top, okay, what you will notice is that just 1 minute. What you will notice is that this currency has actually changed from the downward movement to up movement. So from here to this point, now the market came back to the 61.8 and bounced here. So that has actually shown us that we should be buying this currency pair. Number one, the fundamentals showed us that we should be buying AUDCAD, and here the technical as well on the weekly time frame. So this was a clear bounce on the 61.8 fib level. So come down to the daily time frame, you will see more information. You can see clearer here on this is the daily time frame. If you look at the daily time frame, you can see how the market has started reacting on the 61.8 and is bouncing up. Right, so come to 4 hours. This is what we now notice. Okay, so on the 4-hour time frame, we can see, let me delete the Fibonacci, the other one. Okay, so on the 4-hour time frame, we are left with this information now. You can see a trend change. The market was pushing down on a downtrend, then it went up. It could not take away this level. So since it did not take away this level, it started retracing and took away this high. So once this high was taken up, if you take a ray and place it there, you will see something. Okay, let's zoom this in out. All right, so this is what we are left with. The market came down, it could not take away this low, so it started an up movement by taking away this high. Now there's a video on market structure. If you want to understand market structure and when there is a clear change in trend, you should watch that video on market structure. So it broke this high and retraced, and the uptrend has continued, as you can see. So what we can do on AUDCAD is this. If you take Fibonacci retracement on this 4-hour time frame from here down to this level is 1. Okay, you can expect to take a buy position somewhere around here. This is where we'll be taking a buy position from this level. So if you are on this call, I want you to set a pending order for a buy at 0.8771. You can take a pending order for a sell, for a buy. Yes, AUDCAD, you can take a pending order for a buy at 0.8771. And then if you take a pending order from there, it's going to be a long movement. I'm expecting a long movement. So if you take that buy position from there, let's say a long position somewhere here, now you are going to extend your take profit all the way up. Let me zoom this out. All right, at least that will should give you a risk reward ratio of just 1 minute. Should give you a risk reward ratio of at least six times of what you are out to risk. If you risk $5 on this thing, you should be aiming to make up to 6 times of whatever you are risking. Okay, so this is one trade on AUDCAD. We'll be looking at other currency pairs later. Let's look at gold. Let's look at gold and see what gold will be giving us. Gold against US dollar. Okay, so this is the chart of gold. So let me remove all drawings because I like to start this thing from scratch. So if you come to the weekly time frame, what we will see here is that for the weekly time frame, gold has been moving very slow for some time now, but overall you can see there on the weekly time frame that we'll be having very slow price action on gold. But let's dig further. You will see that for some time gold has been in a range around this level. It's been testing this level. Okay, it's been testing this level. It has not been able to break above 2084.115. It's not been able to break above that level for some time. Then if you take your range, just let's get a range here of what gold has been doing. It's been playing down within that tight range. So that is one thing about gold. Now let's come to the daily time frame. So if it will give us more information. So if you come to the daily time frame, this is what the daily time frame actually showed us, that gold is in a slight downtrend on the daily time frame. Okay, so let me delete some things here so that we can actually understand what we are doing. On the daily time frame, you can see that gold started from here, came down, gave us a low, then a high, a lower low, and now it is pushing back up. So from here you can see that gold is in a mini downtrend within a tight range. So it broke this level. Okay, so that is one information, because as we are analyzing, we are looking for where to make money this week. So let's go down to the 4-hour time frame. If you come to the 4-hour time frame, what do you see? Do we have any useful information on the 4-hour time frame? Just like what I said in the daily time frame, that gold is showing us a mini downtrend. So you can see it on the 4-hour time frame as well. Okay, so it started from this level, pushed down. In fact, this was what happened. It started from here, pushed down, went up there, came down and then went to retest that level, and then what happened? It broke the previous level structure to the downside. So gold is in a downtrend, and I'll be looking for a sell on gold for this week. So this is what I will do. If you take your Fibonacci retracement from here, from this level down to this level, what do we see here? I'll be looking for sell positions around this level and this level. Those are the two places I'll be looking for sell position. Another thing we saw on the daily time frame is this. If you take a trend line from here, let's get a trend line from this point, cross to this point and move it up. Okay, so what do we see there? On the daily time frame, you can see that gold actually broke this level, came back, retested, and has continued in the downtrend. So this is one thing that is giving us information on gold. Okay, so if you take your Fibonacci retracement, from this level down here, you can see that 61.8 fib level is a very good target for us right now to sell gold, or 78 points. This for me, I will place a pending order if gold comes to this level. If gold comes to this level and show me a kind of a reversal candlestick pattern, I will take a sell position on gold. So let's say we are selling gold from this level here. Our stop loss, because this is gold, is going to be very tight. We are going to use a small stop loss there, and then all the way down we can make 4 times of whatever we are risking on gold. Okay, so that is my position on gold. For now, there is no trade yet. I'll wait for it to retrace to 61.8 level, which is this level 2034.410. If it gets to that place, I might take a sell, and that place where I'll be more confident to take a sell on gold is at 2048.252. So if you have any question on gold or any other thing, you can still drop it on the comment. So we are here on the chart of the pound against Japanese yen, and we'll start our analysis from the weekly time frame. If you look at it from the weekly time frame, this currency broke this level, which is 188.593. It broke that level last week and closed above it. You know, it made several attempts on that level previously, but last week it finally broke above that level, broke and closed above that level. So with that information, I knew that I need to add to my trades on the pound against the Japanese yen. So if we come from the weekly to the daily time frame here, you can see what we have here. Okay, from the weekly time frame, it broke this place, it came back to retest, and on Friday it actually started bouncing up. Okay, so this is a clear indication that what we should be doing is to buy the pound. But where exactly are we going to take the trade? Come down to 4-hour time frame. Last week I told my team on the WhatsApp channel or WhatsApp group to buy this currency pair. So we took a buy, and let me show you exactly where we took that buy position. We took Fibonacci retracement from this point down here. Okay, so we did this. If you zoom out, let me zoom out so you see what I mean. And this thing came back when it retested, came here and gave something like a morning star candle pattern. So I told my team to take a buy on this position. In fact, I actually took a position exactly at this level, because most of the time when I place pending orders, I place my pending orders at 0.786, which is 78.6 fib level. So I took that trade around 188.339. So that trade is currently in profit. Okay, but if you have not taken this trade, there is still an opportunity for us to trade. So what we will be waiting for, if you can still take this trade even now and but just know that you will be using a very wide stop loss. But if not, you wait for it to come down a little. It might happen like this. Then by the time it starts going back up, you can take the trade. By the time it might push down a little, then you can place the trade. So this is the 4-hour time frame. You can come down to 1-hour time frame even. Okay, so 1-hour time frame, what are you seeing here? The market is pushing down. Let's hope that maybe it can push down to the 50% or this, but this trade is a buy for me. I've already entered the trade and I'm allowing it to run. Okay, but I can still add to my trades. If anytime that it will go up, break this high level and come down, then maybe I can look for more opportunities. But right now, some of the trades we took at this this level will be there running. Okay, we already in profit by how many pips already from here down to the current position. We are in profit of up to 90 pips already. Okay, up to 90 pips, right? But that trade is massive. Let me show you where our overall target is. So if you come to the weekly time frame, let's go to the weekly. Let's see where we are targeting. So from the weekly time frame, what we will be targeting is this level. If you zoom in very well, you will see the level where you should be aiming. So this is where I'm targeting. I think this trade is going to move from where it is to this level. So let's check out how many pips we have here. So overall target on the pound against the Japanese yen, we have from here down to this level, which is giving us around 633 pips. So this trade still has some money to give us. You know, if you are a very patient person, you can hold on to this trade. You know, one thing about trading, the first thing is for you to place the trade. The second thing is for you to manage the trade. So we have up to 665 pips. So you can hold the trade from this level to that point. And in the process, if anything happens within this period, you know, we will also know how to react. So if you want to know how I will manage this trade, you should follow the WhatsApp channel. It's a free channel there. Most of the time I share some of my trading signals. So you can follow that WhatsApp channel. It's going to do you a lot of good. So that is that about the pound against the Japanese yen.